Economic slowdown, market volatility and liquidity crunch always bring focus on emergency fund. An emergency fund is the savings set aside to cover unexpected financial requirements or emergencies. Banks' recurring deposits continue to be the best option for building up an emergency fund. Debt mutual fund is another option available to an investor to create the emergency fund. Normally, return from liquid funds is similar to or slightly higher than bank fixed deposits. The fund is suitable for investors with low to medium risk appetite and for investors nearing retirement. Partial investments in debt funds enable to balance the risk and improve returns. As in the case of recurring deposits, the amount can be built over a period through systematic investment plans. SIP route enables to tide over market volatility and average out the cost of investments. Net asset values of debt funds are less volatile compared to equity funds, yet they too are subject to market risk. The NAV of debt funds are influenced by interest rate cycles and credit risk. Fluctuations in interest rate in market affect the value of investment and lead to market risk. Credit risk arises if the issuer of the instrument fails to repay the interest or principal on due dates. Because of the risks associated with the debt funds, it is important to choose debt funds with lower credit risk, better portfolio diversification, short to medium maturity profiles, and inherent high liquidity. There are different types of debt mutual fund schemes. Debt funds are categorized based on the tenure or nature of debt instruments in which the funds are investing. Liquid funds, money market funds and corporate debt fund are major among them. The three debt funds suitable for investments through SIP in the present circumstances, for short to medium horizon, are ICICI Pru Liquid Fund, Kotak Banking and PSU Debt Fund and IDFC Dynamic Bond Fund. Investors, please note that mutual fund investments carry various kinds of risks and shall seek advice of the financial planner before investment.